Hello everyone. It's raining outside and it seems like you got all trapped. Hope you brought your umbrella, but meantime we'll try to keep you entertained as much as possible. Please join me welcoming the speakers here. We have Jaehyun from Ignite Capital, David from Mirana Ventures, and Edward from Hashed. So we will be talking about crypto infra from investment perspective, and let's try to extract some alpha from these speakers. Could you first help to explain what you do and your background briefly? Why don't you start from Jaehyun?
Hi, this is Jaehyun from Ignight Capital. We are a small friends and family office based in Singapore and Korea. We are more of a liquid fund. We do anything in regards to on-chain activities for DeFi, yield farming, lending and borrowing, OTC trades, and stuff like that. And recently, there are many alphas on the infra side. So we also have been deploying capital and our resources on doing those as well.
Hi everyone, my name is David. I'm the managing partner of Mirana Ventures. Mirana Ventures is a fund that was anchored by the co-founders of Bybit. So we do direct investments into projects. We do fund-of-fund investments. We are LPs in about 30 funds. We do Bybit strategic investments as well, and the eco fund for the Mentos ecosystem.
Hi everyone, thanks for being with us today. I know infra is not always the most hot topic, but hopefully we can keep it as engaging as possible for the next 15-20 minutes. My name's Edward, and I think you might have heard a little bit about Hashed already in the past couple of panels, but just a very quick rundown on the context. We are also the co-host of Blockchain Week, Korea Blockchain Week this week. We are a global crypto native fund that's been around since 2016. So been investing across multiple verticals, infra also, but not just infra, L1, L2, gaming, DeFi, consumer focus. And we're present in Singapore, we're present in Korea, in US, and recently we also have a team in India. Yeah.
Speaking of engagement, you dropped the right word, Edward. So why don't you start with you? So could you introduce your favorite infra deal that you covered?
I think well, that's a good one. I guess it always boils down to what is considered infra, and I think we don't really have a fixed definition for it. But the way I look at it is, just before, setting the context to this, infra for us is anything that is developed or operated or helping to scale standard blockchain infrastructure. So L1s could be considered infra. L2s in particular would be considered infra. But more importantly, if you're looking at some usable products, could be oracles, it could be cross-chain or interoperability bridges, and that's something that we will also consider investing into. But for me in particular, I try to look a little bit more into DeFi infrastructure. So that's something that we recently started looking into. I think it's anything that helps to scale DeFi beyond where it is today. DeFi has maybe something in the range of like 60 billion total TVL locked. And if we consider the whole crypto asset class, that's very, very small percentage only. And if we look at actual whole size of the crypto, it's tiny compared to actual traditional finance asset class. So there's a lot of things here that we want to grow, I think, on a DeFi level. Recently, we committed to investing in a product called Infinite. Infinite is also probably one of Mirana's portfolio companies, so we do actually have a similar view on DeFi infrastructure. But just to be short, I think Infinite here is trying to build a DeFi abstraction layer. So the same way that you have alt layer and conduit doing rollup as a service, DeFi as a service is pretty important, because if you have developers trying to build products, most of the time they take 3 months, they take 6 months to build something from discovery to writing the code to auditing to scratch. So if you have an infrastructure there that actually takes you to market immediately, builds your community, choose different chains that you can launch on, that's something that we're interested in helping to scale. So yeah, that's some of the early projects that we've been looking into at the moment.
Awesome, thank you for the answer. David, unfortunately, Edward already took Infinite away. But could you help to share one of your favorite deals that you covered from a perspective?
I think it's a very challenging question for me to answer, because if I say one company, the rest of the other companies will come after me. But I'll just try, right? So first and foremost, I'll exclude Mentor Network, which is the modular L2 that we have been working with. I think something that has been quite interesting the last year would be A-Tier. I think the founder is actually here today as well. His name is Mark. But they are like a decentralized cloud computing company the reason why I liked about them is they did a very different go-to-market strategy, which they started to sell the nodes itself. So they got quite a good ramp in terms of the go-to-market traction and stuff like that. And the technology itself, underlying it, has a lot of use cases. So after they have launched to market in that manner, I think a lot of the DePIN or decentralized computing projects also tried to do it in a similar style. So I think they brought some innovation from the go-to-market standpoint. So currently, I guess you could say they are like my favorite for the time being. Yeah.
Awesome. Jaehyun, I know Ignite Capital. I just learned Ignite Capital is more actively engaging in a liquid strategy than a primary market entry, right? Could you help to explain what does your firm primarily do in that perspective, and maybe try to make a little link on the infrastructure approach?
Yeah, it was a very difficult question for me because we're a liquid fund doing different on-chain activities, and when the topic infra came out, I mean, what we could actually think of was the activities that we did previously to help the infra services to work out well. So normally what protocols or services ask us to do is liquidity bootstrap. For instance, if it's like an AMM DEX or if it's a bridge, we help them support the capital so that the bridges can be working well without any delays or any capital leaks, or if it's AMM indexes, also we provide capital so that there's not too much MEV opportunities or price deficiencies. So that's something we actually do. Or when it comes to primary deals, which we do not do that much, but I think what we did that can be related to infra is we invest into Gnosis Safe. So those wallet kind of our security service that we are actually quite keen on, because we use wallets and like ledgers or MetaMask on a day-to-day basis. So we know how extreme security and risk can be on chain. So I think that's maybe a good tie that I can think of.
Awesome, thank you. But speaking of that point, we both were on the trading floor in Tradify prior to coming to the crypto, and there's a lot of trading-related infra, right? For example, clearinghouse, like DTC, all those settlement venue. Do you think a blockchain can potentially unlock new potential opportunities to the trading perspective infra?
I think this is a really good question because when we first came to the blockchain, crypto industry, like normally how things work out in TradFi, as Nathan mentioned, you trade with counterparty, and the clearinghouse will help out sort things out, and it'll take more than 1 or 2 days just to make sure there's no accidents or anything happens when crossing margins and stuff like that. But in crypto, whereas there's only one counterparty that can be known as the centralized exchanges, and when DEXs popped out, I think that gave more headaches to regulators on how to actually regulate, or how to say it, to give, like maybe if they're asking for like licenses, how would they give out licenses so that it can be regulated? So, but I think these days many teams that are newly created, they're actually thinking of and raising money in a sense that they will actually try to be fit into the regulation and acquire a license and go. Well, although the idea is to be decentralized, but decentralized in a regulated way. So I think maybe in the future that it can be something that can be worked out well.
Awesome. Thank you for the insight. David, when you click the webpage, Mirana Ventures, on the very first page, there is a Sahara AI investment announcement, right? I see a bunch of different segments, bunch of different sectors who are actively deploying capital across multiple different projects, right? Some are semi-infra related, some are like straight infra related. However, the point is that there could be many different sector-specific infra projects. For example, AI infra, like trading infra. How would you define infra in the crypto space in your perspective?
I think to Ed's point, it's a very broad category, to be honest. I think, to put it simply, it's just things that makes the blockchain work. It can be, the oracles like Chainlink, or it can be like even applications like decentralized cloud computing that I mentioned earlier. That's even I would consider some DeFi protocols as infrastructure for the L1s and L2s, because without that there is no ecosystem there, right? So it's really hard to kind of like quantify it in a definition standpoint. But what I would suggest is like it's important to look at investments into this space from a perspective of like longevity, because like infra projects are not like applications projects which they are here for one cycle. They generally requires a longer time for adoption and a longer time for development and tech completeness and stuff like that. So from an investor standpoint, if you are paying attention to infra space, from an investment thesis, you would be quite silly to think that it's something that you can exit in the immediate cycle. That's something that you want to do from a longer term perspective. So you mentioned Sahara AI, right? I think we made a sizable investment into that, alongside with investing into Sentinel, which I think is also another good AI infrastructure project. These two companies have raised from the likes of like, I think 60 to 80 million or something like that. And I think they will be spending the first 2 years or 3 years building a lot of like different tech components of the infrastructure before they even roll anything. So I think from our end, we want to back teams that have a bit of that bigger ambition, and also the ability to raise sufficient capital to build certain infrastructure modules that are pivotal and changing and innovative to the industry itself.
Awesome, thank you. Edward, you did mention that you have a passion in the DeFi space, right? Which is somewhat adjacent to the infra sector. For example, Uniswap, however, Uniswap can be a protocol, and Uniswap can be an interface, right? How would you define, in your perspective, how would you define infra?
Yeah, I think it's a good question because, as David said, like you can't really, and most of companies wouldn't really want to bucket themselves into one category either. Most of the time, if you fall under like Uniswap, okay, Uniswap is probably an interesting example because you wouldn't say that they are infrastructure. It's an front end, it's an interface that you would interact to buy and sell your tokens, to swap, to provide liquidity, but it doesn't really help scale anything. And I think when you think about infrastructure, it has to be a baseline to help scale something. It helps bring maybe funds across different chains. So cross-chain infrastructure, cross-chain bridges would definitely fall under infrastructure. If we look at a DeFi platform, like let's say a DEX on Uniswap, a DEX on Ethereum, a DEX on Phantom, a DEX on Avalanche, a DEX even on Mantle, that wouldn't be considered infrastructure. But if you look at a cross-chain DEX, now that could be interesting, and you could probably fall that under DeFi and infrastructure, where you have something like Tor Swap. Right, I think that's one of the few DEXs that does cross-chain, not just bridging things across-chain, but you're swapping things across different chains, whether you use a messaging layer or whether assets actually get changed across. There's also some companies like Hyperlane, Mythotis, they're doing something interesting in the field of cross-chain, and that will be parked under infrastructure. Not sure if there's anything I didn't answer from that, but yeah, happy to elaborate.
You answered everything perfectly, thank you. So we, our topic today is an investment perspective in the crypto infra, right? We talked decent amount of topics on the infra, so why don't we shift the gear and try to focus a little bit on the investment side? So I know as all three of you, as good investors, you try to find founders who's able to identify good problems, right? Because good problems typically lead to good answers. Why don't you start from Edward? What would you say, typically when you see founders who's coming up with a good problem definition, what kind of traits do you see from them?
Good founders with good traits. Maybe I can shoot this back to the audience to just see that. Are there any founders in the audience here today? One founder, two founders, three founders. Awesome, awesome. Just for the record, I think you guys have made a very big brave step, and I respect a lot of you guys for this big move wherever you guys came from in the past. And every time I speak to a founder, I'm always impressed with the kind. It's not easy to be a founder, and I want to give you guys the respect that you deserve first of all. But if you are going out to a pitch, if you are within the infrastructure space, I think that you first of all want to think about two things. One is first of all, why are you building what you are building now? So most of the people actually try to answer the question of why it's required, but opportunity cost is very, very high in crypto. And if we deploy it into X project now, we're missing out on project Y and Z. So you need to be convincing them not just what you're building and what you're solving, but rather why you need the capital now. And I think a lot of people miss out on that timeline point. So that's something that I also want to give a piece of advice, but also something before you should think about, because that's how we park very good pitchers or good founders from the later ones. The second thing is also on how you're pricing your infrastructure. I think nowadays that infrastructure probably gets a bit of a premium on a lot of apps. And I think a recent podcast was very interesting between the Dragonfly investor and BlockCrunch. They're talking about why folks are investing in infrastructure a lot more than apps. And you have to think of it from this point of view. If you raise at such a high valuation from a premium, what you end up is not being able to go to market. Because in a market like this, and at this point in time where it's a lot more important, there is not enough secondary market liquidity. And that's why we have folks like Ignite trying to help boost the liquid capital in the open market, especially for alts, where you see only BTC and ETH dominating OI and trading volume on all exchanges, but alts are not doing well. So if you're trying to price your infrastructure at such a high valuation from the get-go on a private round, you're not going to be able to hit the market very confidently with enough capital to start, seeding it on an ongoing basis. So two things, I think, from the way you pitch on the get-go, why you're building what you are and why you're doing it now. The second thing is how you're pricing it. Enough capital to get you through maybe 1 or 2 years, or maybe even 3 years, or you can think about just doing a very short bridge round, very small, get the right partners you need to help you scale, that builds you out to the network, and then after that take you to the next stage. Yeah.
If I may add on to Ed's point, I think in the past cycles, you probably think that infrastructure projects will be a higher FTV in the market. So you have the likes of L1s and L2s that definitely perform better from a valuation standpoint to say the applications like Uniswap and stuff like that. But I don't necessarily think that will always be the case, especially today. There are so many L1s and so many L2s, and the majority of them actually do not hit good valuation, right? Certain of our portfolio companies, be it ZK Sing or Avail, which are super promising from a technology perspective, super promising from a product perspective, they're not doing as well in the current markets just because macros are not great. So I think if you are building in the infra space itself, you need to be somewhat realistic about what kind of valuations you'll be able to command in the open market. At the same time, also be a little bit more conscientious with the fact that you need a lot of resources to build the entire tech stack, and also to drive adoption, right? You can have the best tech stack and there's no adoption, and then you will not have any interest from the secondary markets, from the public markets in terms of your token. So I think gone are the days where it's a lot easier to have a high FTV just because you're an infra product. I think right now it's okay, I'm building this infra, who's going to use it, why are people going to use it, and why are people excited about it? Right, I think that's something it's important to consider.
Yeah, I think maybe I can also just add to David's point about that, because it's really important. I think that you're trying to build out a full-fledged team, and I think it's very cliche, but we have passed on many deals with excellent tech teams, but unfortunately we realize that they're not able to scale this on a commercial side. So I think as you go out to a pitch, you might be an extremely strong CTO, you might be extremely strong background from maybe Coinbase, from finance, but you also need to have someone with a very good business element. So I think shout out to my portco over here, A Priori. I think that they're a very, very strong team that has a very good mix of tech experience and a good mix of commercial experience. Both co-founders are both developers by nature, but they also have a good traditional finance experience in a very big PE fund, but they also have experience in Jump Crypto, which is very crypto native. So I think that's if they're around here and you want to meet them, they're also they're right over there. Ray, you can raise your hand. Yeah, great guys, man, great guys.
Jaehyun, for you, I think I'll try to fine-tune the question a little bit. So you are specialized in providing on-chain liquidity, and you are specialized in deploying your capital on the liquid strategy. And a lot of time, infrastructure founders are trying to bootstrap their initial growth by enticing a lot of capital base for the early stage, like TVL, right? How would you say, in your perspective, how does a higher TVL correlate to the actual growth potential for the chain?
So when we look into the DeFi protocols that are newly launched, and if we are the only liquidity and we become other people's extra liquidity, that's something that we do not want to be part of. But if the protocol itself is very promising and there's a straight pathway towards accommodating as much as retail investors or institutional investors, I think that's something we would actually sacrifice us being someone else's extra liquidity, but in the hope that this TVL will definitely boost up at the end of the day. So, and most of the time that we believe that there is like a very promising protocol, we definitely sacrifice ourselves, and obviously TVL will grow, and they end up being the big teams in the DeFi space. So I think TVL definitely matters, but if they show good guidelines, good roadmap, I think it will eventually lead up to the TVL boosting, and they become they'll be very successful.
I think I just wanted to add to that, David, because we recently invested in a DeFi infrastructure product, which is doing about 300 mil TVL. But it's also very important about how you are able to monetize that TVL, because that's what exchanges will look at also, right? Because you might have a huge TVL, maybe decent metrics, but if you're not gaining any revenue, that's pointless, because the moment you turn on your fee switch, the TVL will drop out. So I think about, you need to think about if you're a SEX or you're a DEX or you're a perp DEX, or if you're something like a DeFi abstraction layer like what I spoke about earlier, you need to think about how you're able to turn on your fee switch, or at least try turning on your fee switch and see what the attrition and retention rate is for your TVL. And that's something that I think, again, some founders maybe miss out as they try to iterate their product along the way.
Yeah, so from TVL perspective, I provide hundreds of millions to TVL for emerging protocols. I think if you're a founder or investor, you're looking at this TVL metric, first and foremost, you want to know that whether this TVL is sticky. Like maybe you run, finish your points campaigns, all your TVL disappears, that's not sticky. And then there's the other consideration is like when you have an open environment where you are not locking someone, sometimes actually the TVL can be more sticky, right? So Zirkit is something interesting. You can withdraw your stake ETH anytime from Zirkit, and yet they are still commanding between like 2 to 3 billion of TVL. So I'll consider that TVL a little bit more unique, a little bit more sticky, right?
I'll just add short comments. I think the use case or use case in the interoperability is something that will contribute to the TVL boosting, because people want to see that the DEXs or any DeFi protocols that I use will actually benefit not only us but whoever uses the protocol. And I think not just by giving like incentives or pouring them incentives to the retails, or giving out like point system, like forcing them to come for point system. I think that's something will not have a sustainability on TVLs. So I think yeah.
Thanks for the great answers, guys. Last question. So here's a joke. When you want to make two crypto investors fight in the bar, you have to ask, would you invest in an application or would you invest in an infra? Because nobody knows the right answer, and they all have a different opinions. So I want to ask the very same question to three of you as our last question. Would you be more bullish on infra or application at the moment, given your market thesis? Let's start with Edward.
I think it's unfortunate because my answer doesn't actually match the reality out there. Which means that we are very happy to invest in consumer. We are very happy to invest in app layer, but that's not what the market likes, right? If you look at the valuations that are being eaten up by the market today, layer 2s are launching at multi-billion, but you have Friendtech at sub 10 million FTV. And Friendtech has probably a lot more users than many of these, I mean, on a net basis, right? A lot more users, a lot decent metrics, and probably even fees, if you look at a revenue or profit standpoint, than many of these layer 2s. And that's a little unfortunate because that's like, I mean, fundamentally, it should be valued a bit more. Maybe it's a lot, like the product's not great, but fundamentally we value a little more. And if you're an investor, for venture investor, and you're investing at this, I mean, Friendtech would probably be at the fund, when they were raising, they're probably something in the range of 50. You would have lost 80% of your money by now. And this is not on an unlocked basis before it even hits the market. So the question then is, if you like apps, but the market is not eating apps, then you shouldn't be investing in apps. But that should change, I think, over time. Once there is more liquid capital that builds up in the market that is focused more on apps, then I think that changes also, because all now you have like multi-billion hedge funds coming out of the US that are raising, $1 billion hedge funds, not hedge funds, sorry, venture funds, or even 600 million venture funds. And these are focused purely on investing in venture. But then who's opening up your bags outside in the open market on the liquid side? So over time, I think that this will change as there is more interest on the app front, and if there's more interest on interesting infrastructure that's serving consumer-facing apps. So again, shout out to, I think, the folks at Sonium. They are building something very interesting. Lena's over there. We didn't invest in them, so I'm not just like shouting out projects that we invested into. Like full disclaimer, right? I think the crypto field is a lot of folks that are super smart, super innovative, but not necessarily, we don't always catch all of them. So Sonium guys are actually building a chain for Sony, one of the largest conglomerates in Japan. And if you know, Japan is like huge for consumer-facing apps, whether it's media, whether it's entertainment, whether it's music, whether it's drama, anime as well. So they are building a lot on that front, and they're building out an L2, an infrastructure, with a very strong team that's also built in the past from A-Star, so a very old product that has been very, very strong also in 4 or 5 years back. So yeah, to answer the question, we are interested in apps, but unfortunately, I think apps are not getting the kind of market supply and market demand, but that's not something that we focus on only. Just because they don't doesn't mean we don't invest into them. So I think, again, one last example of like app dash infrastructure is Backpack. Backpack is a very consumer-facing company. They are building out an exchange, but they are also the founders. They are also the owners of the products behind Backpack Wallet, the largest wallet on Solana. But they are also the owners of Mad Lads, which is an NFT community. So good mix of like app dash infrastructure, which we are very happy to just jump into.
You unfortunately use up all the time for this.
No. Please.
You owe a beer for these two tonight.
No, please.
Do we go on, or should we stop?
Probably really quickly.
Oh, I'll do it really quickly then. I think it depends on your resources as the investor. I think we have a general preference towards infrastructures predominantly because we are able to help with the go-to-market process. We can help with TVL, we can help with applications building, invest in companies like Infinite, right? So I think the direct impact that we have on infrastructure businesses is a lot more, right? For applications, they are still within our investment mandate, but it's just like we are counting on these founders to be able to bring in like the users to drive the adoption and stuff like that. So the impact is less on our end, which is why I probably lean towards like more infrastructure products.
I have nothing to add, actually.
Awesome. Thank you very much.
Thanks everyone then. Yeah.
Thanks everyone.
Thank you.
Thanks,
Thank
Nathan.
you.
Thank you, everybody.